If you're an employee working for a company in Nigeria and you're wondering what your pay as you earn or personal income tax will look like in the new Nigerian tax regime come January 2026, this video is for you. If you're an employer of labor in Nigeria, just like I am, if you're a small business employing a few people, this video is also for you because it will give you an idea of what your employees' pay slip should look like. It will give you an idea of how to treat your employees' salaries going forward so that you stay on the right side of the law. In this video, I'll talk about eligible deductions before an employee's tax is calculated and how much tax you will pay as an employee. I'll use different annual salaries, so stick around so that you see how HR arrives at the amount you see in your bank account every month as salary. Here we have a table of your personal income calculation. For this employee, the annual gross salary is 1.2 million naira. Once you're hired in an organized company, but come 2026, every company, even small businesses that hire people, is expected to be organized like this by fire by force. Else, So once you're hired in a company, this is the amount they will tell you that is your salary. Remember, this is the gross salary, not the amount of money you will be getting in your bank account. I think it's important for me to say this because I found that a lot of people, because they're used to working for maybe one-man businesses, when they join an organized company, when they tell them, okay, this is what we're going to pay you as annual salary, they expect to see that amount divided by 12 as salary. No, there is something called statutory deductions, as you will see later in this video. Gross annual salary can be broken down into basic salary and different allowances. The most basic breakdown of a gross salary you can see is basic salary, transport allowance, housing allowance. Depending on the company, you can have more, such as leave allowance. Some companies have provision for wardrobe allowance. Some companies give meal allowance. Some companies provide an office bus in lieu of transport allowance. In that case, they will not give you transport allowance in cash. Hence, you will not see it in the breakdown. The same way, some companies will have an on-site caterer that feeds their employees. In that case, you will not get a meal allowance in cash and so on. But for the purpose of this video, we'll assume a company that has basic salary, transport allowance, and housing allowance. It doesn't really matter how a company breaks down the gross annual salary. What matters is that the salary you're getting, the gross salary you're getting, is above minimum wage, which is 70,000 naira per month. That's 840,000 naira per year. Then we come to eligible deductions. These are parts of your gross salary that are not taxable. So usually they are removed from the annual gross salary to get what is known as taxable income. And it's on that taxable income that tax is applied, which is actually a good thing because that way the employee will pay less taxes. Or sometimes no tax at all, because if the resulting taxable income after all these deductions are taken out is below 800,000 naira, the employee will not pay any tax at all. I hope I'm making sense. If not, don't worry, just keep watching. It will make sense by the time you finish watching this video. Just don't skip any parts, Now, let me explain the eligible deductions for employees of companies in the new tax law. The first one is pension. Pension is an employee's contribution towards their retirement. In Nigeria, the law says that you, the employee, will contribute 8%. Hence, why this employee is contributing 96,000 naira, which is 8% of his annual gross salary. The law says that your employer will contribute 10% of your salary. It's not shown here because it's from their own money that they will contribute that. It doesn't have anything to do with your own salary breakdown. If this new tax law is well implemented, even if you're working for a one-man business, let's say you're working as a sales girl for a businessman that sells goods in the market, that your employer should contribute 10% of your monthly salary as pension every month, and you will contribute 8% every month. And even if you leave that job and go and work for another person, that contribution you made and the ones that your employer made for you should follow you to your next job. I mean, there should be continuity for this. There should be somewhere that you log in into a pension fund and see all you have contributed in your active life. I mean, we all know how implementation goes with our country. I'm hoping that they surprise us with this one and implement it very well. But I'm just sharing knowledge here so that you know your rights, so that when you look and these things are not going as they told us that it will go inside the law, then you can speak up for your rights, claim your rights. Because I tell you, when you retire, it is from all these contributions that you will be paid your pension. If you contribute small amounts during your active years in service, you will earn small amounts as pension. If you contribute large amounts during your active years of working, you will earn huge amounts as pension. Anyway, let's continue. The next eligible non-taxable income is mortgage interest. If you took a loan to buy a house, your personal house that you live in, the interest that you are paying back every month on that mortgage you took from the bank is not taxable. So it will first of all be removed from your annual gross income before tax is calculated. I don't know a single person that has a mortgage, a real mortgage of 25 to 30 years in Nigeria. The only one I know is where you have to pay off the cost of a house that runs into millions, even more than 100 million within 12 months, at most 18 months. That one is not a mortgage. Anyway, interest on mortgage repayments is on the list of eligible deductions. And you can see that this employee does not have a mortgage, hence no entry for that. The third eligible deduction is National Health Insurance Scheme, which is the healthcare contributions that will enable you receive treatment from hospitals that participate in NHIS. This is usually common with employees that work in the civil service. They contribute 5% of their salary towards NHIS. You can see that this employee will be contributing 60,000 naira towards NHIS every year. Some employers in organized private sector provide healthcare for their employees via health management organizations, the ones they call HMOs. Each company has a way they deal with this healthcare contribution thing. But a lot of good companies want their employees to have good healthcare. The fourth eligible deductible is National Housing Fund. It's 2.5% of the gross salary for those who want to contribute to NHF. You can see that this employee with a gross salary of 1.2 million naira per year is contributing 30,000 naira, which is 2.5% of his gross salary. Another eligible deduction is premium or annuity towards a life insurance. So if an employee took out a life insurance for themselves or their spouse, that payment towards the life insurance is a non-taxable income. So it has to be deducted before tax is applied. Another eligible deduction, which is actually a new one, is rent relief. With the new tax law, the government wants to regard part of your rent as non-taxable income. With rent relief, you can deduct up to 20% of your annual rent with a maximum of 500,000 naira per year. So it has a cap. As far as I'm concerned, this amount is too small, especially for those who live in places where rent is so high in Nigeria, like Lagos State. You can see that this person pays 500,000 naira per year as rent, but the portion of that rent he can deduct before tax is applied is only 100,000 naira, which is 20% of the annual rent. You will see the maximum amount clause play out when we increase the annual salary, because we are going to play around with different salaries later. Remember that these are eligible deductions for those who work for other people as employees. We'll talk about eligible deductions for those who work for themselves because they have their own eligible deductions as businesses. Some of them will shock you. So with the eligible deductions laid out, the taxable income is the annual gross salary minus the total of all these eligible deductions. To find out how much tax this employee will pay, we use the tax table. As you may have seen from my previous videos, the tax is progressive, meaning the more money you earn, the more some of your earnings will spill over into the next tax band. For this employee that earns an annual gross salary of 1.2 million naira with a taxable income of 914,000 naira per year, you can see that according to the new tax law, this person does not pay tax on the first 800,000 naira of that income. It's only on the 114,000 naira that spills over into the next tax band that he will pay tax on. The 114k is obviously from 914,000 minus 800,000 naira. That 114k falls under the 15% tax rate, and that gives us 17,100 naira. as the total tax the person will pay for the year. Assuming this person has a life insurance that he is paying a premium of 114,000 naira or more per year for, this person can easily not pay any taxes because by then his taxable income would have dropped into a band that is tax exempt. To get the take-home income for this person, we subtract all the statutory deductions from his gross annual salary. Personal income tax is just one statutory deduction. Pension is another one. You have NHIS, NHF. Statutory deductions in Nigeria are mandatory deductions from employee salaries. These deductions are needed for funding specific government programs, social security, and other required obligations. So after paying all these, if the government does not provide them, it is your right to get up and demand for it. If you don't demand for it, it's on you. So don't be asking me, are they going to use the tax to provide healthcare? Are they going to use the tax to provide good roads? It's on you. If you're paying taxes yet you don't have all these amenities. Your employer is required by law to take these from your gross salary and send to the appropriate government bodies. So add all of that and deduct the total from the gross annual salary, and we get 996,900 naira. Divide that by 12 and you get his monthly salary. Like, this is what will go into his account boy every month. Now, let's play around with several gross salaries. Let's say someone earns 5 million naira per year. You can see how his pension, NHF, and NHIS increase automatically because all these are percentages of the gross salary. And you know, if your earnings increase, your lifestyle will increase. So let's say the person moves to a better apartment whose rent is 2.5 million naira per year. 20% of 2.5 million is exactly 500,000 naira. So this person has maxed out on the rent relief allowed in the new Nigerian tax law. From this amount on, even if you increase the rent, you will see that the rent relief will not change because 500,000 naira is the maximum. You see, that 500,000 naira did not change because that's the maximum rent relief that the government will allow you to deduct before tax. We can play around with this person's income by saying that he has a life insurance policy that he's paying 150,000 naira for per year to further reduce the taxes he has to pay. Okay, let's reduce his rent again because he does not have any business paying rent with more than half of his gross annual salary. We know it's possible in Lagos though because rent is very high in the commercial capital of Nigeria. So that gives us a taxable income of 3.575 million naira. You can see how that taxable income cascades through the tax table. The first 800,000 is in this tax band. The next 2.2 million naira is in the next tax band. And whatever is left is in the next tax band. That's how it works. That you have 3.575 million naira taxable income does not mean that the government will apply 18% to all that money. Boy, no. Looking at this table, one can easily assume that 3.575 million naira falls under this tax band. But that's not how it works. Let's try another one. Gross salary of 15 million naira. You can see how the excess spills into the 21% tax band because 800k tax band was maxed out, 2.2 million naira tax band was maxed out, 9 million naira tax band was maxed out, and the rest spilled over to the 21% tax band. And because this is addictive, let's see how the rich guys will pay tax. Let's fill up this table, man. Let's take out rent. You can't be earning 50 million naira per year and be paying rent, I beg. Let's add mortgage interest for him. How much now? Because I don't know anybody paying mortgage in Nigeria, I have no idea how much interest someone will be paying on a mortgage repayment per year in Nigeria. Let's put 5 million naira for him. And then let's increase that life insurance to 500,000 naira for him. We get that his taxable income is 36.7 million naira. Check out that tax table. Almost filled up. Look at what someone will pay as tax. Madre mia, 7.5 kawaii. And then let's fill up the table. Have you clicked the like button yet? Have you? No? In spite of all this fun I'm giving you here, click the like button because this is fun, man. Tax can be fun. This is the only time it will be fun, when you're not paying it, when you're just calculating it. Calculating other people's taxes. If you need this spreadsheet, let me know in the comments. I'm still thinking about how best to distribute it. Let me know how many people are interested in it first. 80 mila per year. Let's do this. Who earns 80 million naira per year in Nigeria? Maybe CEOs of banks. Who knows? Please let me know in the comments. I'm curious. The tax table is finally filled up, and this annual salary, the 80 million naira annual salary, is a perfect illustration of how this tax table works. You can see that he did not pay any tax on the first 800k, paid 15% tax on the next 2.2 million, 18% tax on the next 9 million, 21% tax on the next 13 million, 23% tax on the next 25 million, and 25% tax on anything above 50 million naira, giving a total of 13.455 million naira in taxes. Actually, I need to know how much he effectively paid in taxes. 13455 divided by 80000. 16.8% tax, which is actually not bad for a very high earner in Nigeria. I am sure you enjoyed this video. Give it a like now because it deserves a like. Do you know how much time I spent working on this spreadsheet? And share it with your family and friends. Yeah, share this video with your family and friends because every Nigerian, both home and abroad, needs to know what they're doing with this new tax law, needs to know what we're getting into with this new tax law. And subscribe to the channel if you haven't done so already, because I will continue to dissect this new tax law and its implications in the life of Nigerians. See you in my next video.